Here is the strategy that made the majority of my crypto gains. It's based on this chart over here. Look at this, plus 213%. This is how I made my money, the bulk of my money in crypto. It works by buying into Bitcoin on a predefined interval with a predefined dollar amount, your dollar cost average into the market. So what we see here at the bottom is the amount that's been invested. So that's in gray, and in green we see how much our portfolio is worth. And of course this fluctuates quite a bit, but in total there's only an investment of 73,000 over those 6 years here. But after those 6 years, we've got 228,000. This is monthly a purchase of $1,000, something that's, I think, pretty much doable for the majority of people, or at least for the majority that's somewhat serious about investing in general. Now, first of all, why does this even work? It works because you buy no matter what the market is doing. Bitcoin is very, very volatile. Bitcoin can go down 60, 70, even 80% from the all-time high. It's one of the most volatile assets, but it's also an asset that sticks around, that's not just going to be completely forgotten. And in that sense, it's similar to, say, a mortgage, right? Where you try to simply just allocate to the asset class regularly with your regular cash flow, in general, betting that fiat currencies depreciate faster than whatever additional supply hits the market. What kind of a time horizon do we need here? This is a chart for the last 6 years. But what about if you only had, say, 5 years? Then we've got plus 150%, right? 56. So it goes down from plus 113 to 156. Let's say you only got 4 years, then it's only plus 83%. 3 years, plus 31. And there we go to 2 years or 1 year. Look at how close our portfolio line is relative to the invested money. So we're really fluctuating around the invested money only if you have 1 to 2 years of time horizon. What really makes the difference here, if you continue buying when the price is going down. So you need to have strong enough of a conviction in Bitcoin that it still keeps generating outsized returns. You need to be buying when everybody is giving up on crypto as a whole, when everybody is scared. You need to be buying when it comes down 50, 60%. And when you do so, then you are rewarded handsomely. And the reason why I like this strategy so much, especially for Bitcoin, is because you cannot necessarily dollar cost average into any kind of asset, right? That's true for crypto, that's true for stocks. Most stocks and most altcoins underperform the index, so to speak. The index for stocks is simply just, say, the Nasdaq ETF or the S&P 500 ETF. The index for crypto is Bitcoin. Any cryptocurrency that's launching needs to have the aspiration to outperform Bitcoin because you take on more risk with any altcoin. So more risk should result in more return. But if you're dollar cost averaging, say, in number 10 in terms of cryptocurrency market cap, you're very likely not going to see those new all-time highs in the future. If you dollar cost average into Dash or into Bitcoin Diamond or into Ethereum Classic, you wouldn't be so happy. But if you dollar cost averaged into Bitcoin, you would be very happy right now. And the problem is, in terms of portfolio composition, you want to be allocating most of your money into something that's comparatively likely going to stay around. So you've got the small bets that have the potential outsized returns, so you can risk very little money hoping for the 10x. But when you want to deploy a lot of money, a lot of your savings, you need to have something that you can be relatively certain to stick around. And that can be an index ETF for stocks, or for crypto, it can be Bitcoin. So when looking at those different charts, right, with the different duration, what we can see, we have to at least go through one cycle in order to make this worthwhile. We need to have at least a time horizon of 4 to 5 years. And I don't know why this is such a special thing in crypto land. Everybody in crypto is looking at these very short time periods. But that's very different for other investment vehicles. It's very normal to hold your gold over 10, 20 years. The same for stocks, it's the same for bonds or for property. Once people talk about crypto, everybody is talking about how Bitcoin crashes 60, 70%. Nobody bats an eye that the equity value, when you've got a mortgage, for example, also can come down by that kind of a degree, right? When you put down, say, 20% on a house and now the property prices crash by 20%, you're basically at zero equity. You have lost all of your money. If you have to sell at that point, if you can't further serve that loan, you've got a big problem. So in terms of price volatility, in terms of risk, property might even be more risky than Bitcoin. Now, why is Bitcoin always recovering? It's because of this chart. This shows the Bitcoin price over the very long term. So this starts in 2010. And when we look at this purple line over here, we can see how much of all of Bitcoin has not moved in the last 10 years. So this is likely the Bitcoin that has been completely lost. But we can even zoom further in. Let's look at the Bitcoin that hasn't moved for the last 7 years. This is also ever increasing. Let's look at the Bitcoin that hasn't moved in the last 5 years. Same thing. Ever increasing. And what's important here is that this is the fraction of all of Bitcoin that's floating around. This is not the number of Bitcoin. In other words, the liquid Bitcoin gets tighter and tighter. There is less and less Bitcoin to go around. And there's even the programmatic aspect of this, right? The Bitcoin mining. It looks like the mining cannot offset the long-term holders or the people that are losing Bitcoin. So in aggregate, if Bitcoin doesn't suddenly become illegal, it's less and less available in the market. And that's something very unique. If you buy a house, you don't know if a lot of other houses will be built very closely in that neighborhood. If you buy stocks, you don't know if there's another company that will outcompete your specific business. When you buy gold, you don't know really how much gold will be mined. The gold inflation seems to be even higher now than the Bitcoin inflation. So there seems to be more gold that's hitting the market every year compared to Bitcoin that's hitting the market, also in relative terms, not just in absolute US dollar terms. So as long as Bitcoin doesn't get regulatory issues, it seems to be the perfect savings vehicle. It seems to be the best vehicle to store wealth. Once we look at the holders that hold Bitcoin for 3 to 5 years, we can see cycles. So there are people that ride those waves and I can't blame them. I also sold half my Bitcoin at around 50k. So it wasn't the absolute peak, it wasn't at 69k, but still I saw the market was pretty heated. We saw a lot of speculation around Dogecoin, we saw a lot of Bitcoin transactions, we saw a lot of attention in the media around Bitcoin. During those times, it might make sense to take some chips off the table, especially after a bull run when the fraction of your portfolio in crypto is especially large and you want to take out some risk, some volatility, then it does make sense. But besides those heated periods, there is very few reason to move capital from such a strong asset to something weaker, which is fiat currency. Fundamentally, fiat is way weaker than Bitcoin. Bitcoin is the hardest of the monies if it simply stays around. It's not necessarily something that you can use all day. It's the same with gold, right? You can't use it to buy a loaf of bread. And nobody knows if it will really be used for everyday transactions in 5 or 10 years. But that's not the speculation here. Speculation here is simply that Bitcoin becomes tighter and tighter, that there are more and more long-term holders that store their wealth in Bitcoin because it's independent of governmental intervention. Potentially also independent from taxation if you're willing to move jurisdictions. It's easier to transport than gold. There are a lot of properties that are very, very unique to Bitcoin, and it has way less centralization risk than a lot of other altcoins. So if you don't have a lot of time trying to generate alpha, trying to outperform crypto, then simply just buying every month will do fine. There are ways, of course, to make even more money from this, riding the waves or trying to bet on falling crypto prices, right? A lot of altcoins are very inflationary. They tend to lose versus Bitcoin. There's also ways to make money with this, but that takes way more time, way more effort, and it's more like the cherry on top. But once you've got large enough of a portfolio, once you crack, say, the 10,000 US dollars for your crypto portfolio, then it makes sense to also look at alpha generation because the crypto market is still, as a whole, quite inefficient. I share my approaches, how I generate alpha in the premium membership. So if you do have a portfolio of 10k or more, feel free to check that out. It's thebitcoinstrategy.com. There's more information also in this video over here. Looking forward to seeing that video, and thanks for watching this one. Bye-bye.